transpired this weekend?
Yeah, so let's see. Overseas, German industrial output had its steepest decline on record in April. Of course, the market doesn't care because it's April, but it did plunge 17.9%. Um, ING economist Karsten Brzezinski said it was the quote worst month ever unquote for Germany, but the Bundesbank feels the peak of the economic crisis is likely over. Of course, that's what the market's been trading on. It sees a contraction in the German economy of 6.3% this year, but that's based on what we've been talking about, that they are looking to do 130 billion euros in stimulus just in Germany. So that 6.3% decline uh, takes that into account, apparently. We also had the latest Centix survey results. For those not familiar, it's a weekly. Uh, they survey 1,500 investors, institutionals mostly, uh, across the world. And historically, with this thing, when you see a big divergence between what they're saying 6 months ahead and the current situation, have been good signals for the bottom of economic recoveries, and that's what we had this time. So that's showing the economic bottom mostly likely is in, and the same thing. We got the same kind of readings we did in 2009 and 2012 for that. Um, uh, Interesting news in the oil patch. So we had the OPEC Plus deal over the weekend, and the finalized pack calls for collective cuts of 9.6 million barrels a day until the end of June. And Nigeria and Iraq are supposed to make up for uh, the cuts that they didn't do. So they're going to have deeper cuts over the next couple months to make up for that. Mexico, though, won't do oil curbs beyond June. Now, oil jumped on this news. Initially, it was well over $40, but then it came back when Saudi Arabia. Now, remember, Saudi Arabia had curtailed its production more than its agreed quota. So they did a temporary cut. They said this morning, though, that those extra reductions will just last for the rest of the month because they've served their purpose. And then oil sold off a little bit on that. So that's what's going on there. No domestic news of note, but famous hedge fund manager Stanley Druckenmiller. Remember, he used to work for George Soros and made all that money when the pound collapsed in the 90s. He had an interview on CNBC this morning, and he said that the market's strong performance over the last week has, quote, humbled him. Yes, indeed. He was kind of like Jeffrey Gundlach, who said that we were going down. He has only made 3% versus the 40% rally in the market since March 23rd. What he said was there is a combination of the Fed. You would think that he would know not to fight the Fed, but
you would think.
You would think, but at least he admitted that he was wrong, which of course I never do. So, all right.
It's easier on the ego not to admit it, though, Lee. That's why.
Yeah. Yeah. So let us go ahead then and do stocks in the news. There's quite a few today.
Sure thing. Let's do that. I'll bring some edge up here. Where to begin this morning, Lee?
Let's take a look at Gilead and AstraZeneca. There's rumors that they want to merge.
Okay.
Where Gilead would be the target and AstraZeneca would be the acquirer. Yeah.
Okay.
So if they did it, the combined companies would have a market capitalization of 232 billion. It looks like they, these are both involved in COVID research. Gilead's got their drug, and AstraZeneca is working on the vaccine. So, as usual, the acquirer it goes up, and the acquirer goes down a little bit. But we'll have to just keep your eye on that one going forward. Dunkin' Brands, DNKN. Oh, right up
Mm.
at the 200 day, huh?
Right
Look at
at some
that.
resistance here for sure.
Yeah, interesting to see how it's going to behave there. They said that they're going to hire 25,000 workers. Um, at KeyBank Capital Markets, analyst Eric Gonzalez said the company has executed well during the pandemic, and fast food chains seem to be bouncing back in general more than other segments of the restaurant industries. And Dunkin's sales
Does,
have been improving, though.
does the story note how many employees they had to lay off as a result of the COVID?
No, well, I didn't see
Okay.
it. Maybe it did, but I didn't see it.
All right. Well, 25,000 is a pretty good number for sure.
Yeah, well, actually, Taco Bell, which is part of Yum Brands, they said they're
Mm-hmm.
going to hire 30,000. So,
Okay.
all right. Uh, company we've never heard of here, Amazon.
They do this book thing, I've heard.
Yeah, that's right. Anyway, the analyst over at RBC Capital raised their target to $3,000 a share.
Okay. Thing
Or
just continues to resemble a bit of an ascending triangle, doesn't it, Lee?
yeah, yeah.
Or you could even say that it's,
It looked like
just
the tail
continuing to
today
do
though was
this.
right at the all-time high, didn't it? And then it
It
backed off a
was,
little bit.
yeah. And I thought, yeah, I was, that could just be the early morning excitement out of it at this point. But I agree. Looks like it got a little bit of a breather as it got up to there. Boy, my lag this morning is a little challenging. I apologize, everybody, trying to get this to work for us. But right there, thereabouts.
And yep. So I think at this stage, you might as well wait for it to break.
Sure.
Okay.
Yeah, get a close above the all-time high, and things start to get a little excitable, I would assume.
Yeah, but anyway, $3,000 is the target over at RBC.
20% bump from here. All right.
Yep, we've got Thor Industries. You know, they make RVs.
Nope,
If you're not familiar with them, like
that's
Airstream.
the wrong symbol, Lee. What do
It's
I
T
have?
A. It's THO. Yeah.
THO. Got it.
Yeah.
Yeah, the RV market, huh?
Yep. They've been on a tear. Um, they beat on earnings by 53 cents, and they did have stronger revenues because people were looking for a loss of 10 cents, and they made 43 cents. So the 10-day
Wow.
obviously is.
Pretty
This,
good.
this one's been on a tear. I mean,
Wow.
yeah,
April 8th. You've had one close below the 10 days since April 8th, Lee.
that's crazy.
That is impressive 2-month rally.
Yeah. Um, wow. I don't know. It can't sustain that kind of arc, though. There's just no way. But
Yeah, I mean, imagine it being thrown back at some point, but
yeah,
boy, if you've traded this and have done well, obviously, I mean, 150% plus, this is exceptional. So kudos. But Lee, when you always say, you're not a big fan of taking profits at all-time highs necessarily, but it's a ways away here. Would you use something tighter than this? Maybe a 5-day moving average or something? I mean, really
yeah,
tough. Oh,
yeah,
look at this is the weekly.
yeah. So,
You can see why it might breathe here.
yep. Yeah, maybe you take a little off the table and see what happens to me. But yeah,
Yeah, I wouldn't fault
interesting
you for
level.
being a little bit cautious. It's a very interesting level. It's certainly retreated from this 109, 110 range before. Above that area, sure, it has more opportunity, I would think, but might take some time to
Yeah,
do that. This is, like you said, it's parabolic. That's pretty
yeah,
tough to sustain.
yeah. Um, all right. Tesla,
Okay.
stocks nobody's heard of. Well, looks like they're gonna go test that high.
Certainly want to now. They're breathing a little bit today, but that was because of a hot start. Really strong gap off the open, and there's just that's the only thing in sightly is the prior. Let's use the 5-minute here. Let's see what we have. Prior highs is really it. So you're looking to maintain the gap low today.
Yep. Anyway, the news was they triple their sales of Model 3 vehicles in China would triple the April's results. So they sold almost 12,000 Model 3s in May.
That's pretty good.
Yeah, market likes it.
Where's my symbol? Okay, it's in there. All right. Next up, Lee.
Twitter. Yeah, so it got a positive write-up in Barron's over the weekend. They said it is an excellent play on the post-COVID-19 recovery. So looks like you got a little resistance moving up there at around 39, but it'll probably get there.
Mm-hmm.
Very interesting.
Yeah, for any more context on that, Lee, what is a post-COVID recovery? It's not like
Yeah,
Twitter's been non-existent during COVID. It's a little confusing.
Yeah, I don't know.
I'm not sure how they expect that to just be suddenly, more active or more ad rev, but okay, that's interesting.
Yep. Zoom Media. They just pointed out, Barron's pointed out a little bit optimistic pricing in that they are trading at 33 times current year sales, which is huge.
Mm-hmm.
But don't fight.
So it's funny how it takes an article to point that out, even though it's been known for the entirety of this move. Everybody's been pointing that out. They.
Yep.
But yeah, it needs to make the mainstream area news, doesn't it?
Yeah. A lot of analyst actions, especially in the airline group.
I'll bet. What do we have there?
All right. Merrill Lynch upgraded Alaska Air to a buy. We'll take a look at Jets later, but they're moving today again.
11% pop.
Yep.
We have an inside day here, trying to get back up above the high from Friday.
Yep. They also upgraded JetBlue, but only to neutral, but it was underperformed.
Good enough for an 8% pop?
Yep. I guess you got to feel good if you're the Merrill Lynch analyst.
I guess. Powerful.
Yeah. We got Adobe was reiterated as outperform at UBS. They're in that software group, which has been doing real well.
Mm-hmm.
Obviously, the 10-day is something you want to watch there.
I think so too.
Okay, we talked about Amazon's upgrade at RBC. Boeing, which is on a tear today, was initiated coverage at Seaport with a buy. So Boeing's getting a lift from the airlines industry too.
Do you even acknowledge these gap areas, Lee? I mean, at this point, the move it made, it fell so precipitously. I mean, it just looks like a bit of a vacuum in here between here and the 200 day, doesn't it?
Yeah.
Look at the volume weighted average.
There's nothing in there. There's nothing in there. Looks like it's going to continue going up to the 200 day. It looks like there's nothing in there.
It looks like it could. All right.
Yeah. And everybody's favorite vaccine maker, Moderna, was initiated with an overweight rating at Barclays. And the analyst
struggling against that 10-day,
crying in his coffee, went down. Yeah,
I think the 50 is the most important moving average here, Lee.
Yeah, I do too. Okay, we got a question. We got a question on the NASDAQ Composite. Why is it down this morning? The chatter is that people are a little worried about the Chinese-American geopolitical situation. That's what I heard about why the NASDAQ type stocks are lagging a little bit today. Also, you're having a continued rotation into the beaten down groups of cyclicals and value stocks. Although I have to look at the financials, they might be turning around again. I don't know. Well, we will do that when we do the indices.
Yep.
which is about now. So take it away.
All right, let's check out that S&P and see what's going on here. We're not getting the S&P 500 boost that you are in the Dow 30 here. I'm sure the Dow 30 being led strongly by Boeing.
Yeah.
So that's giving it a lift here a bit. So, but the S&P, we've been talking a bunch about the 10-day and the importance of it. As you can see, we continue to move, in this upward trajectory, where we seem to be ready to challenge the all-time highs. I mean, what are we, Lee? About 1.5% off of the all-time highs here from S&P. So, it's really close. But the action continues to be optimistic, and since the trend has been in play here, really, we continue to keep an eye on the 10-day moving average. There is a gap ledge right here at around 3260. So I could see a bit of a pause at 3260 if and when we get there. Beyond that, Lee, it would take a little bit of further from start to fill in that gap. And then once we start to fill in the gap is when I think we start to challenge we have the opportunity to challenge the all-time high around 3,400 there on the S&P.
Yeah, a question: if you did sell and you're trying to buy at this point, maybe maybe you get to the 10-day at some point. It should be a logical place to enter.
Yeah. Yeah, it's tough, isn't it, though, because your risk reward ratios now are all askew, to say the least.
Right.
Take a quick peek. This is the 5-minute chart, everybody. We've got a number of, the big gap up from Friday, right? Big move on Friday's action. We got a little bit of a breather in the afternoon. We came back, and now you can see that our open was a hot open. That was a gap open right here, and now we have held that, coincident with the 20 EMA that a lot of the shorter term traders continue to eyeball on a short term basis here. So you're sitting right at support, right around 3,200 on the S&P. It's a level we want to see maintained on a short term basis today for sure. But ultimately, the pivot, I could see us even coming and testing the pivot in here through a little bit of weakness. But hanging into the pivot at around 3190 would be perfectly fine. And actually, I think a lot of traders would just say if you hold the bottom of the gap from Friday, you probably maintain your bullish bent to the S&P here. But you agree with that, Lee?
Yeah, I think so.
All right.
So let's look at the
The
NASDAQ
NASDAQ.
QQs.
All right. Right at it, Lee. Look at that.
Yeah, a little bit of maybe somebody is taking a little bit of profits, but again, it's the kind of unease right now with the Chinese situation. I heard is a little bit of caution, but certainly still, you're right at all-time highs. So.
Yep. And you've got some pretty impressive action from the on-balance volume here.
And the RSI?
And the RSI, both looking really favorable. Setting up as hey, we have a matching high situation here. Note that we are not looking at a double top until we get some sort of resolution with that, though. So yep. I know you can see it; it's there, but you don't want to predict what the next move is here. That's been difficult, to say the least.
Yep.
Now, you called out the Qs, Lee. That's because we noted the NASDAQ 100 has been lagging here today. So let's take a look at that. Yeah, so it actually made new highs on Friday. And right. Now you're breathing a little here. Getting a little bit of, like you said, Lee, a little bit of that rotation, right?
Yeah, yep. I think that's what's going on.
I think so too. And you think about how strong this has been, just a little bit of rotation is actually kind of healthy for the broader market. Would you agree?
I would.
You don't want to be led constantly by the same, half a dozen stocks. That's the thing that I'm always a little cautious on here. Now, for the record, the 10-day has been pretty sound. But if you'll note here, the 20 actually has not been violated. And that's one of the things that I like to keep an eye on. Which of these moving averages is most consistent? The 10 has given you numerous opportunities to join in, even though you might not feel great at the opportunity when it presents itself. The 20 having been held going back into that first week of April looks to be a pretty good way to run your risk situation here. So the unfortunate aspect, of course, Lee, is the 20 SMA today is about 10 points away, 9 points away from where we are right now. So
Yeah.
that risk reward ratio just isn't lining up.
Yep. Somebody wants to see the equal weighted version.
Okay.
QQQE.
Sure. That actually made another new high today.
Yeah. So that's a slight positive.
Sure. So, all right. From the NASDAQ and the NASDAQ 100, we'll check out our leader, which continues to be one of the better ones. The Russell here, Lee, continues its strong move. Wow. Again, call this out as a reflection of what's happening in banks, right?
Yep. And energy too.
Sure. Yeah, both continue to be on tear. In fact, energy is leading our sector move today, and financials doing pretty well also.
I think Exxon's up like 5%, something like that. It was.
Yeah. I think I saw Halliburton up 8 or something. Yeah, there's a lot of those energy companies moving. But the Russell continues to be an outperformer of lately. I'm going to just bring up not only the RSI into positive, isn't that upper ledge there above 70 now. Check out what it looks like as price relative to the S&P, which I think is the thing that is a little surprising. But look at that. That is just instructive. That tells you a lot, doesn't it? So nice to see the Russell doing this for us.
It is, and I think it also supports we're getting this rotation into value to a certain extent.
I concur. Transports, no surprise. We're seeing these continue with the airlines getting strong. We talked about the imperative nature of airlines doing what they've done in the last 3 to 5 days in order for the transports to continue to do this move. And that's why you're probably why we got the gap move on Friday, while we're maintaining the 200 today. We can give it a third day tomorrow of holding the 200 and the gap low from Friday rather. And I think you're going to see a lot of individuals suggesting that the transports are in a much healthier situation now than they had been very recently. So like what we're seeing out of the transports here as well, Lee.
Yep. I mean,
that is a strong RSI.
Yeah, put up Jets as long as we're here.
Yeah, let's see it.
Yeah, those 2 upgrades.
Yeah, a big day on Friday. So
yeah, it's kind of an inside day, just kind of working off what it did Friday.
Exactly. All right. You called out China, so that's likely leading to what's happening here with the SOX and the broader NASDAQ to an extent. Had a good day on Friday, but that doji kind of gave you a hint of indecision here. I'm going to hide the 20 and see if we can't get the 10-day. Yeah, see, the 10-day might be a spot where we get a little short run support here. Otherwise, I'm not so sure. I mean, I'd like to say that it wouldn't get to the 10-day because the 10-day, the move it's made here. The 10-day is pretty extended from here, right? Or we're extended over the 10-day rather. 257 and change. So that's 12 points away. So that's not going to feel fantastic if the SOX is suddenly 12 points lower from here. A little sideways consolidation would feel a little bit better though.
Yeah. I had a question on Jets. If you trade in it, where you might want to set a shorter term stop or profit stop or stay put. I would say under Friday's low.
Yeah, I think so too. Yeah, Friday's low puts you out at 1965. You are risking a buck and a half from here. I could understand if you don't want to give up that much, but Friday's low looks to me to be about that spot.
Yep, I'd say so. You had a question on the VIX. It's up today. Does that mean they're hedging up here a little bit? Yes, it does.
I would expect that too, yeah. And the VIX has undergone quite the unwind here, so yeah, I would expect a little bit of hedging after the move we've seen in the S&P.
Yeah, you get a better all clear signal if we could break those previous lows, though. But we had that. We talked about that level at around 25 something. That big
Mm-hmm.
tail of that candle back at the beginning of March was what we're looking at. See that there?
That one right there.
No, not yet. Keep going down.
Oh, I'm sorry. You said the beginning of March.
Right, the big tail down there. There you go. Going. Yeah.
All right.
Yeah, so we did break it on Friday. We're a little bit above, but I think we would like to see the VIX break that level. So uh, but right now, to the point, there's a little hedging going on.
Yeah.
What does hedging mean? It means that at least vis-a-vis the VIX, there's a lot of buying in S&P options, like a lot of S&P 500 puts, which is generally an institutional product. They buy the options. They can be by going, volatility is two-sided, remember, up and down. So they're buying both calls and puts. Usually they're buying more puts. So the demand for puts is, so the price of the option goes up, which means the implied volatility goes up, which means the VIX goes up.
All right, Lee. We also had a good question about how do you manage trades in this instance? Meaning, we have a lot of stocks whose charts are breaking out, stocks that look good, have positive RSIs and overbought conditions. One of the challenges to putting money to work right now is, of course, the risk reward ratios are all off base because you're buying up at these upper levels, and it can be a little challenging to say the least. So I understand the idea of wanting to put a little bit of money to work. Can't fault you if you decide in overbought conditions that you want to participate, take small positions. But I think the question you pose, Joel, is a good one, asking about waiting for pullbacks. I think given the nature of the market, you're better suited to be putting money to work on those pullbacks when you get the RSI to come below the 70 level. Initially, that's a bit of a heads up to some traders as a sell signal, so you want to give it a little chance to breathe. But I like the idea of putting money to work on pullbacks as opposed to buying on days when stocks are running. At least that's proven to be a bit more effective, especially since, Lee, all we've been seeing is every pullback has been bought up, it seems.
Yeah, and sometimes the pullbacks last all of about 20 minutes too. So
Also true.
so buy a little, but have some powder in reserve in case you do get a pullback.
Yeah, I think that's a good way of putting it too.
Yeah.
Okay, Lee, I've got us sorted by sector action change for the day. We can see, as we noted, energy having a really nice day here this morning, up 2%, continuing its trudge up towards the 200-day moving average. That is at 50 and a quarter. I mean, I don't have anything to suggest that we can't get there at this point. Do you?
No. The question is, why are they up if oil is down?
Mm-hmm.
Well, I mean, the just today, I mean, oil generally is a lot higher than it had been. This group has been underweight for so long. I think it's part of the rotation continuing.
Sure. And then the industrials is a close second here today, having a little continuation move here.
Yeah, and again, these are rotational stocks, industrials, energy.
Mm-hmm.
Now, financials are up as well. That's another part of the rotation.
Hmm. Check out the financials. And they're up, even though the TNX is pulling back a little. We had the 10-year bond had a huge week last week.
Right.
So we got a really good move out of the financials. Um, do expect a little bit of a breather here at the 200, perhaps. And we're kind of
Yep.
getting it right now, aren't we?
Yeah.
Be nice
So
if we could just kind of meander here and let everything catch up, wouldn't it?
yeah, that would be the strongest, would be a correction by time as opposed to price.
Hmm.
There's also, though, with the markets working, you'd also have to be forced to add a little bit if we broke through the 200.
Yeah, I
It would,
agree with that. I
then
agree
then
with that.
you'd have to have a tight stop under the gap low of Friday's low. If that happened, that's where you'd set your risk probably on that.
Yeah, I think if you're a longer term investor and waiting for the right time to put money into the financials for the longer run, I think it would be a confirmation of recapturing and holding the 200 day would be a spot when people would be looking to add to that. Or to if you've been light in financials because it's been such a rough ride, recapturing the 200 would start to shift that viewpoint a bit. All right, we talked about small caps and
Let's look at
transport.
real estate. That's coming
That's
back
what
to
I was
life.
gonna say. Yeah, it is. I got a lot of lines in here. Let me just remove
Back
them.
above the 200 on the REITs.
There you go.
And we've been watching in particular on charting the market, the REM. See how that's doing. I pointed this out. It broke out. Yep. Continuing. Up another 6%. These are the mortgage REITs. Told you all about those when they broke out last week.
All right, more strength. Can we check? Well, let's check the home builders since we're here.
Up again.
Yeah, even on days when it's getting those lengthy tails in the morning and then selling off in the afternoon, the trend just continues. Could be at a spot of a little bit of
It
resistance
could
there,
be.
but
It could be.
not too
Yeah.
far from the all-time levels there, Lee.
Yep.
But this could be a spot to take a little off, maybe. Um, it is a little in overbought conditions. This trend has been amazing. This has been also parabolic. Man, there's a lot of charts that look quite like this, aren't there?
Yeah. I mean, certainly things are overbought, but
Yeah.
remember, number one, they can stay overbought. Number two, they can just correct by chopping around for a while too. They don't have to pull back necessarily on price.
Mm-hmm.
Somebody wants to look at insurance.
Okay.
Doing better than the banks today, I think.
That actually, and the RSI giving you the highest high it's had since
Yeah.
a year ago. Looks like that's calling out the 200 pretty clearly. 32 and change. Continues to look strong. Lee, how about restaurants? Is there a DWC group for that?
I don't know.
Okay, but I wonder if
Oh, but
here.
here is an
Go
interesting
ahead.
way to answer that question. All right.
Yeah,
Go put up a restaurant company like Yum Brands,
sure.
YUM. Here's a way to answer that kind of question because I don't know off the top of my head. Now go to schwab.com and look at ETFs holding this stock.
All right. I'll jump over to schwab.com. Notice I just went right from the page, everybody, just right into research Yum on schwab.com. And that takes us straight into the stock itself.
And what we
All
want
right.
and what we want down the page, it'll say ETFs holding this stock.
Lower still.
Yeah.
There we
Here
go.
we go. So it doesn't look like there's
Yeah,
something necessarily just on restaurants. I mean,
yeah, consumer discretionary makes obviously the most sense,
yeah,
but that's what, and this is the equal weighted S&P 500, mid cap, large cap. So there's not a sector specific or group specific. Great. That was a nice way to back into that, Lee.
yeah.
That was a nice little teaching moment. I'll take it. So let's check out XLY then while we're here. I do think that that's the way to play the restaurant rebound if you're thinking about it. Unfortunately, it's not the only group within that category
Right.
or within the sector, of course.
Because I mean, home builders are in that too.
Right. Yeah. And you can see where this resides at previous highs.
Yeah, right at
And you know,
at the
I gotta
all-time
say,
high.
Lee,
It's
I was out.
crazy.
Yeah, it is. And I was out a little bit this weekend, just driving around and whatnot. It's people are dying to be out and about, Lee. Just, I mean, there's a human need to be out and about, and the places that I've seen that are open and serving are doing so at pretty high capacity. So there is a thirst for opportunity to be out. I thought for sure things would be a little bit more muted, but the only way it's muted is if the proprietor is forcing those mutes on themselves. We're going to keep our tables all apart and everything like that. If proprietors are doing the suggested approach, then you're absolutely seeing limited numbers. But if people are allowing you to come in and sit and engage as you normally would, those places are filled up, I've noticed. So a little surprising to me, but that's what's happening.
All
I'd
right.
be interested to hear what other people are seeing, though.
Yeah. Let's look at biotechs. We have a question on
Sure
those.
thing. Let's do the littles first, XBI, and then
Yep.
IBB.
Okay. So consolidating after their big run.
Yeah.
Little
Nice
triangle there.
triangle here, right? And with a sideways to slightly lower RSI, this is exactly what you would expect to see, right?
Yeah.
So you're getting a little as you consolidate over time because the price action hasn't changed much in the last month here. But that's kind of what you're looking for. I bet the 20-day provides a bit of support here. What do you think? Yep.
Yeah, I think so. That's better than the 10 at the moment. Also, you could just draw the trend lines of the triangle and trade a break either way.
I agree with that too. So just not knowing which way it's going to break, you go with whichever way it does. Woo! There we go.
Right.
Stop.
There we go. Although, I mean, it is considered a continuation pattern. So,
Mm-hmm. Yeah, the odds favor the upside breakout, especially when you look at it on the longer term chart, Lee.
yeah,
Holy
it's
cow.
really good. Yeah, it's really good support there at what, 100, 101.
Yep.
Yeah. Yeah. So if you're
Yep.
underexposed, maybe you use that as a place to add if it gets down there, or if you have it, or you just want to buy it now, also use that place to set your risk.
That's pretty interesting chart when you look at it on the weekly, Lee.
Yeah.
And you're not getting a whole lot of difference here from what you're getting out of the IBB also. Although it's had multi-stage breakout, hasn't it? Because this was the prior all-time high.
Yeah.
Right around 123. Yep. Broke through and tested it. Did another breakthrough. Now it's kind of flagging up here at this area, waiting for that 10-week moving average to catch up. But it's kind of giving you the exact same thing here. I think the couple of things to watch on the IBB here for many traders, I think, this trend line. So as long as this remains held, you got every reason to think there's more opportunity here. A break of this, though, and I think it calls into question this area down here around the 50-day and the 123.5 area.
Which still wouldn't be that bad.
No, no, of course not, because that would be another test of the breakout ledge.
Right.
So, and a test if it tests and holds, that's a positive view, of course. All right, Lee, we're getting a little bit of a rally here, as you can see in the NASDAQ, at least. The NASDAQ's coming off of its lows, gone positive for us, which is interesting. NASDAQ 100 still lagging a bit, but that's still pretty cool. Nice to see a little rally there. So, Lee, what do you think about for a quick screen in a group here? Do you like the healthcare, or do you like biotechs and the way this is setting up? What are you thinking?
Let's look at, let's look under healthcare again. So
Okay.
let's put up the XLV first.
Yeah, I should do that. Let me
Yeah.
jump back here real quick. XLV.
It's pushing higher towards the all-time highs again. Let's look for healthcare over the 20-day.
Okay. Healthcare stocks over the 20-day moving average. All right, so our standard criteria here, make sure we've got this correct. All healthcare, not kicking anything out. We're going to change over the 50 to over the 20. We'll eliminate over the 200. Enough volume, A and B rated. It gives us 40 matches plus. That's more than enough to work with. Save that as a watch list. And let's load it up. Did you see one off the top, Lee, that caught your eye?
Let's look at Humana. That was on there, right?
I believe so. And I'm sure this will load for us in just a quick moment. Reminder that you all have a little bit of a respite from our shows here after our segment today. We'll be back at noon Eastern, and that'll be Spotlight on Futures. So stick around for that one, or take a quick break and then rejoin us, that is. Humana is on our list, Lee, so let's check it out. If I remember, this thing has been, tightly hugging its 20-day SMA.
And now it's back above it. There you go. Stop under the low.
Yeah, stop under the low of today for a really tight entry there. That's interesting. And I think that must have been
many technicians would like that setup.
Yeah, when you look at it on a longer term, you've got every reason for that viewpoint to hold.
Yeah.
Keep that same view, Lee.
Yep. ABBV is an
V. Okay. Yeah. Lots of requests there. Look at that 20.
That's breaking out of a flag too.
Yeah, really interesting action on Friday where you kind of got this thought you might be looking at a head fake, but today's low sitting on essentially the breakout level. Really nice to see the action it's gotten today, carrying you back up. Ideally, you would like to see this with good volume today, Lee. So let's just really quickly check it on the intraday.
No.
That gives you a little pause, doesn't it?
Yeah, it does.
By about 40% versus the 5-day average. You might want to see this take out the high before you decide to add or establish.
Right, because I mean, you'd take it right now if that blue line was above the orange one, but it isn't.
Yeah, and that's the challenge, because if you're buying without the volume behind it, you're at risk for this not continuing its enthusiasm for today.
Right. So keep your eye on that. Take off the RSI so don't get the blue lines confused there.
Yeah, I'm sorry. My bad. Didn't mean to keep that one up. There we go.
Yep, there you go.
Yeah, there's a pretty big difference here between this one today and the one on Friday.
Yeah.
Notice how when on Friday it started to break out. Look at how the volume spiked with it. That's what the kind of move you're looking for.
Yeah. Of course, then it gave it back towards the end of the day.
Of course it did.
But still, that's what you want to look for. And with that, our time is up, Kev.
All right, Lee, always a pleasure. Thanks for joining me today. Of course, Lee will be back a little bit later today with Charting the Markets. You are joined today by our friend and colleague, Nina Millivat. So make sure you all stick around for that one.